Hello everybody, happy Friday. This is February the 16th, 2018. I'm Giuseppe Basili, also known as the FibStalker, and this is the daily and intraday review for today, and this is part of the FibStalker analysis and trading service. Welcome as usual. Please make sure that you read and accept the disclaimer here. Trading Forex carries a high level of risk and may be not suitable for all investors. So let's dive into our markets very quickly. SP 500 broke the 50% short, so this market is now moving higher. The reaction at the 25-27 level was the right level to enter. Now, what can happen in this market? This market could just continue higher to previous highs, and at this point we know that with this setup here we have targets above. If it comes back, it could actually trade in extensions, so the retrace would be very limited from highs to whatever new highs is going to print. Okay, so this would be the opportunity to enter or re-enter this market. The dollar index has actually printed lower lows here, and it's now reacting. So what we don't know is whether this market is going to continue lower and pierce eventually that 86.99 of its putting a reversal. So it's still very uncertain here because when the market moves lower like this and there is the possibility to break a 61% level, we want to see the market strongly selling, like in here, and close the week selling. So there is some profit taking in the dollar here, and we're going to see also let's see now the US dollar, Singapore dollar here. Same situation. As you can see, the market has now printed the lower lows and basically stopped at previous lows here, and we are seeing profit taking. So although there is no 50% below this price is within an area, weekly area of support. Now the sequence here, we want to see this sequence continuing, and we had an extension short 132.45, and the next measured move has traded, and it's now as you can see here, it has traded, and it's now price is now coming back. So this needs to hold, otherwise we could see even higher retrace here, as this whole trend would actually be failed here. So if that's the case, this market could enter a more of a sideways move here, and for sure, well, nothing is sure, but it's highly likely that 131.97 is going to be revisited here. Okay, so this market might be in a junction, we don't know yet. Trading in these conditions is always riskier unless you trade on a very small time frame, and so you need to be aware of that. Gold and silver, we saw that strong move higher in gold, and this market has targets above, but it all depends on what the dollar index is going to do. So the dollar index is going to continue lower, then this market is going to continue higher. And silver, similar behavior here. Of course, silver, as we mentioned a number of times, is weaker, and it's now trading the 50% short. So if the dollar reverses, that's the level where silver is going to reverse as well. Okay, that's the highs to lows. This has traded, and as you can see, has been respected, and we will see whether next week is going to bring. If the dollar index reverses, this is going to move lower. Okay, the dollar index is in a big trouble, but it doesn't mean that it cannot reverse. Now let's get into the Australian dollar, US dollar here. Chris has had a question here as the 50% short traded. So this level has been respected so far, and I was looking to see, I was looking for a I was looking for a break of that 61% level, of course, right? And the market actually reacted to it yesterday, and then today was not able to pierce that 79.91. Now, note this big move higher. There's very little structure there. So at the moment, what I'm using is the high of the previous move here to the new highs that I traded. And if this is broken, then you're going to see this market oscillating between these two levels. Okay, so in these conditions, unless we trade small time frame, trading the market is risky. So don't give back the profits. Don't wait for a clear direction to be set here, because of course here there was an opportunity. I also entered this market. The point is that when I saw this kind of behavior, I'm not going to risk profits just to see whether this market is going to continue higher right away or trade down to the 78.17. Okay. The euro dollar, same situation here. The market has printed new highs and now has put putting ugly reversal here. This is also profit taking of a long week here, but and we will need to see now what happens when this market trades the 50% level. That might not hold, so we're gonna see what happens when the market gets there. Okay, and this might happen on Monday. If we continue this strong profit taking here, this might happen on Monday. So pound, as you can see, all these markets, they all have the same patterns here. And sorry, going back to euro, let's not forget that the trend here, as indicated by the aggressive trades here, has failed. Okay, so this could really be just dump money pushing price higher, and so this might be another hint that the dollar index is indeed trying to put some sort of reversal. Okay, if that's going to happen, it's going to take a few weeks, and we have to be very, very careful in looking at these markets here. And if that reversal is in play, then there is a possibility for a very deep correction in the dollar index, in the euro as well. But before we can be sure about that, we need to see how this market is going to behave in here. So we're seeing profit taking here, and if this 123.79 does not hold, we're likely going to revisit lows, and there is now a possibility for lower lows as well. The dollar Canadian dollar has failed the shorts. Sorry, the shorts have failed here, so the price has actually confirmed the fact that bears are not interested in selling this market, and that happened when the 126.62 has been pierced on the upside. Okay, so what's next here? What the market did basically, and that happened overnight during the European Open. As you can see here, the extension did not hold, but when we look at the full 50% here, you can see that level has held. Okay, so bears have failed and bulls now are started supporting price here, and this is another another hint that we might be seeing some sort of bottoming in the dollar. Okay, so if that's the case, this 50% here as targets above in the 127.87 area here, and we will see if that if price will get there. The The bears have failed here, and that level of resistance, the 125.85, we will need to retest that level as well. Okay, so let's not give for granted that this market is just going to get into the level. It all depends, a lot depends on what the dollar index is going to do. US dollar, Swiss franc, we're seeing the same similar behavior here. This market has traded an extension short, which is the one that you see here on the screen. The first target is just below lows here. Let me change the scale. Let's look at that level, and let's see what's going on here. If this market are reversing here, they're gonna give us a lot of pain, so you have to be very careful, okay? Because you know, a new trend has to be established, and so measured moves might fail because of that. As you can see, the 91.46 was not reached. Okay, so that's what we see on the daily here. And when we look at the sequence of measured move, we have a 50%, the 94.09. The next measured move, the next measured move failed, but the market continued lower. And the next, and this could be a basket setup here, although we don't have a full 50% setup. As you can see here, the trend has failed as well. So all these markets are failing their 4-hour intraday trend here, and they're retracing into their areas of resistance, and the areas of resistance is the 50% short. Okay, 93.27 for this market. These markets, you know, this market actually has a clear setup here. The first target was not reached. We're going to see whether the next 50% short is going to play 91.46. We have to be careful, because if the markets are rotating, we are going to get burned, because of course, I mean, if you time using the FibStalker timing, you should be able to generate a risk-free trade. But if you're not doing that, then you have to be very, very careful. Okay. Now, as I mentioned also in the room, the US dollar Japanese yen has hit the second target, as you can see here, and it has a very, very clear next measure move. This will need to be tested. And although the Japanese yen is being very, very strong and could actually keep moving higher against the dollar, the US dollar, we need to be careful here as well. In any case, here the value is very, very clear. 106.91 is the area that we want to time, and the first target is 104.92. The second target is actually just below, and let's see if we can see that is the 103.88, and that would help price into the 170, which is the level that we know there might be participation from the longer time frame, and that's the 170 here. This is a level that has held well in the past. Okay, so in here the level is very clear. This market could continue lower despite also any dollar strength, and actually we could see the dollar retracing only partially and bringing this price into 106.90, and then that could be an opportunity for a short. Okay, New Zealand dollar US dollar also has challenged and exceeded previous sizes here. but it also is under pressure, not like the other markets. It's relatively stronger. When we look at the longer time frame here, this is the weekly. Remember that we have a market that is moving between two areas here. Lows to highs. This has traded in April 2017 and again at the end of last year. We had a big push higher, and this market has still the possibility to move into 0.7526. So let's see what happens to the dollar index. US dollar, Singapore dollar, we reviewed that already. This market is has had a nice move lower here. It is trading the 31.18, and we will see whether that's the market can get above that, or trade that level and continue lower next week. All right, so this is it for the first part. I'm going to close this video here, and then I'm going to do a review of the other markets as well. Thanks for watching.